What's up, y'all? How are you doing? Today is November 23rd. Time flies, really. Next month is December, and I'm going to be 34 soon. Next year. Wow. I remember the time when I was 25. When I was 25, I was in military base. Um, doing some extremely hard work. Not extremely hard work, but then I was in the middle of the desert and worked for Special Warfare Force. Um, it was a good old memory, indeed. And then since then, a lot of things happened, and now I'm here, mm, waiting to become 34. Mm. And hopefully my goal is to accumulate wealth, um, a lot of wealth. For that, for that dream, I'm studying a bit, little by little, and I believe even if it's 30 minutes a day or 20 minutes a day, if it accumulates, it's gonna be big someday. And anyway, uh, done with talking bullshit. Not bullshit, but things that I've been thinking about recently. And today, what I'm going to talk about is stock. Last time I talked about mm, the company named Cloudflare and what it does and why it's really hot in stock market. And I talked about it. And today, what I want to talk about is um, websites uh, and terminology that traders should know. I mean, like not like traders, but like stock investors should know. Uh, there's a book that I'm reading recently. I read this book over and over so that I can be familiar with the terminology because since I decided to invest um, really hard in stocks of the company located at the states. Uh, like I've got to be familiar with the terminology inside websites such as YahooFinance.com. In YahooFinance.com, they've got like price, equity, something like that, quarterly earnings, profit margin, net income, operating margin, and tonight I wanna mm, like briefly go over the terminologies and see uh what I have to memorize. And in this book, author talks about some of the important the author thinks, some of the terminology the author thinks you should know. Okay, let me go over the terms, and I'm gonna go into yahoofinance.com first, and then I'm going to say aloud the words. I mean, previous close, um, open, days range. It's what I can see at yahoofinance.com summary page. And I'm gonna go to summary page. Summary page. Let's see. Where's summary page? Let's type Facebook, for example. Facebook. And we got Facebook summary. They got charts, statistics, historical data, profile, financials, analysis, options, holders, sustainability, stuff like that. And they got previous close 306.65 open, 302.75 days range, and 52-week range. And they got volume 13. 13. An average volume 22. First target estimate. It's not described here. Fair value. Average volume. Fair value. Fair value is not stated here. Market cap none. Beta none. 2-week range. Fair value. First target estimate 401.93 Meta Platforms. And 1 year. A fair value overvalued. What target estimate? Chart events bullish, neutral, bearish. Chart events. Ex dividend date. And Yahoo Finance market cap. Beta. If it's above 1, then it's sensitivity is large. If it's above 1.3, in long-term aspects, it's not good for you to invest in it. And now I can see is 1.27, which is lower than 1.3. So it's good, not good, but then but fairly okay. PE ratio. EPS, earning per share. And earnings date. earnings dates. Uh, and now what I can see is January 25, January 31st. It means they open earnings at that time. Hmm. Earnings date, beta, P ratio, EPS, market cap, for dividend yield, ex dividend date, for target estimate. It's the average of uh the expectation of analysts. Analyst reports estimates, and it's the average of the report that analysts get. Now let's go over to statistics. Uh, let's go over the chart and interactive chart. Conversations and statistics. Now, what I see is valuation measures, trading information, stock price history, enterprise income statement, balance sheet, cash flow statement, dividend splits, income statement, management effectiveness, and valuation, enterprise value, enterprise value, enterprise value. If enterprise value is lower than market cap, it's a positive sign. Now it's a positive sign because enterprise value is lower than market cap. Market cap. Trailing PE for PE, trailing PE for PE. If trailing PE, if for PE is lower than trailing PE, it's a good sign. Uh, it means we expect to have higher earnings next year. Mm. PEG ratio. If PEG ratio is lower than 2.0, it's what people think of it. It's what people think of as buying timing. Okay. Mm. And what else should I look at? Valuation metrics. We looked over a market cap, enterprise value, 4 PE, trailing PE, PEG ratio, and what else should we look at? Uh, there's a 52-week change, 52-week change, S&P 500 52-week change, profit margin, profit margin, profit margin, net income, operating margin, management effectiveness, profit margin, profit margin. So here I see 35%, and net income or net profit is 35%. Uh, oh no, you see you got revenue, and if you deduct it, you get net income, right? So that accounts for 35%, and operating margin. It's operating income divided by revenue. Operating income divided by revenue. And operating income, return on assets, return on assets, return on assets, return on equity, diluted EPS, quarterly earnings growth, quarterly earnings growth, quarterly earnings growth, 17.20, 52-week change, moving average, 200-day moving average. Shares outstanding. Float. Held by insiders. It's only 0.60%, which is really, really low. I mean, which means as if it's nobody, as if no one inside this company has this stock. Hmm. Here it says if the CEO or the company, the employees of this company has a lot of stock of the company they work for, it means they put great value on the company. But see here, it has only 0.60%, which means employees of the company thinks that this company has no value. Uh, Help institutions, 80%, which is fairly high. Held by institutions. Share short. Short percent of float. Short ratio. Now let's go over to balance sheet. Balance sheet. Balance sheet. What we can see is total cash, total assets, total liabilities, total liabilities, total cash, stockholders' equity, total cash, total liabilities, net minorities. Let's go to profile, historical data, Meta platform, key executives. Key executives and financiers. Now we see income statements, total revenue, quarterly, annually, consensus EPS people also watch. Balance sheet, total assets. Analysis. Let's go over to analysis, earnings estimate, revenue estimate, earnings history, EPS trend, EPS revisions, growth estimates, 38.1% recommendation trend, strong buy, rating, strong buy, options, analysis, current year, next year, next quarter, March 22nd, current year, current quarter, December 2021, March 2022, current year, next year, options, holders, major holders, shares held by institutions, or float held by institutions, held by all insider, number of institutions holding share, top institution holders, Vanguard Group, ouch value shares, top mutual fund holders, sustainability, environmental risk scores, social risk score, governance risk score. Let's go over to statistics again. Let's go off to financials again. What we have to look at is balance sheet, and now we can see total assets, current assets, total liabilities, net minority, total assets, total liabilities, net minorities, stockholders equity, total equity, gross minority interest, total liabilities, net minority interest, total assets. If you add these together, liabilities and equity together, it sums up as total assets. And what else should we look at? It's been 30 minutes. So today, I went over the data's shown in the website Yahoo Finance. If I type, for example, Facebook, I can look at summary, chart, statistic, historical data, financials, stuff like that on website. And by looking at the information here, I can uh, exactly get to know whether I should invest in this company or not. Mm. And last and least, I'm done with talking about how to use Yahoo Finance. Of course, I'm going to be talking about this in detail tomorrow, but then uh, tonight I'm going to explain further, mm, explain the company uh, named Pastly. Hmm, Pastly. Now let's look at some of the information here. Here it says why Fastly products, solutions, resources, pricing, more control, faster content, seriously dynamic applications, develop, deliver, secure your apps and websites with Fastly powerful edge cloud network. Control, scale, and performance everywhere you need it. So long, status quo CDNs. Content delivery network is all about control and reliability. Deliver faster sites and apps, broadcast videos in the highest quality, and get real-time visibility. All in an agile API-first platform. Seriously used for security. More meet the web app and API security solution that everyone will use. From security teams to Dash and Ops are all in one. Easily integrated solution is designed to work everywhere, and over 90% of customers run our next-gen WAF and blocking mode. All the powers of edge computing, gain greater control and speed at the edge and run apps closer to users for traffic experiences. Whatever your architecture may be, Fastly can help. Our edge computing capabilities and serverless compute environments make innovation more secure, performance, and scalable. Proven, tested, trusted. Hmm. The platform built for all of your builders. Hmm. Still a lack of information. I'll be talking more about this in detail tomorrow. Hmm. Fastly is one of the companies that author things we should invest in too. So, we briefly read. I briefly read the articles shown here, but then I'm going to talk about this tomorrow. Okay. All right. See you tomorrow, and bye bye.